Hello everyone, welcome back to the channel. Today, we're going to take a closer look at Ping An, one of the major stocks in China's CN50 group. The key question I want to address in this video is this. Is Ping An starting a new uptrend? Or is this still just a controlled recovery after a correction? If we look at the two signals on the chart that I've been following, one on the 2-day time frame on March 25th at 58.79, and another on the 3-day time frame on April 3rd at 57.25. My view is that Ping An is currently rebounding from a clearly defined support zone, moving in a relatively orderly way, with price action that is not overly chaotic, but still not strong enough yet to be called a true breakout. What I like about this chart is the way price reacted quite clearly around the 56 to 58 area. This is the zone where buyers started stepping back in and absorbing supply, which helped slow down the previous decline. After that, the stock bounced, but not in the kind of explosive way that would suggest a strong momentum move with continuous acceleration. Now let's talk about the two buy points. For the first signal, on March 25th at 58.79 on the 2-day chart, I would describe this as an acceptable buy point. The reason is that price had already started bouncing from support, so the signal itself was not wrong. However, I still think it was a little early in the sense that the stock had not yet created much safety margin relative to the resistance zone above. By contrast, the second signal, on April 3rd at 57.25 on the 3-day chart, looks like the better buy point to me. It is closer to support, offers a better risk-reward profile, and fits better with the approach of trading a stock that is in a controlled recovery phase. When you buy close to support, you always have the advantage of clearer risk management. Now let's move to the price zones. First, the key area of interest is 56 to 58, because this is the zone where the chart appears to be trying to rebuild a base. As long as price continues to hold above this area, the recovery story remains valid. Next is the risk zone between 54.5 and 53. If Ping An breaks below that area, the chart would weaken quite noticeably. At that point, the stock would no longer be in a relatively stable recovery phase, but would start to become more fragile, meaning downside risk would increase. As for the target zones, the first target is 62 to 64, because this is the nearest resistance zone that price needs to clear in order to prove that the current rebound has quality. The second target is 67 to 69, which is the broader upside target. If price can reach that area, then the chart would begin to show signs of shifting from a recovery structure into a stronger bullish structure. So, to summarize the technical picture, Ping An is currently in a controlled recovery phase, not a breakout. The 56 to 58 area is a reasonable zone to monitor. The 54.5 to 53 area is the key risk zone, and 62 to 69 is a reasonable target range if the recovery continues. Between the two buy signals, I prefer the April 3rd entry at 57.25 over the March 25th entry at 58.79. Now let's move to the fundamentals. What is encouraging is that Ping An's recovery on the chart is not happening in isolation. On the business side, Ping An released its 2025 annual results in late March 2026 on its official investor relations website. According to the company, operating profit after tax attributable to shareholders reached RMB 134.415 billion, up 10.3% year-over-year. The company also reported that net profit attributable to shareholders excluding non-recurring gains and losses came in at RMB 143.773 billion, up 22.5%. In addition, equity attributable to shareholders exceeded RMB 1.0 trillion for the first time. Ping An also increased its cash dividend for the 14th consecutive year, bringing the total annual cash dividend to RMB 48.891 billion. Across its core business segments, Ping An also showed fairly solid operating quality. Ping An Bank reported RMB 42.633 billion in net profit for 2025, with a non-performing loan ratio of 1.05% and a provision coverage ratio of 220.88% at year-end. Meanwhile, in the insurance segment, the company highlighted that business performance and operating quality continued to show a positive trend, while its healthcare and senior care ecosystem continued to support cross-selling and improve customer value. That is very important, because a technical rebound is much more credible when it is supported by improving fundamentals, rather than by a business that is deteriorating. With Ping An, I do not see the story of a weak company simply experiencing a temporary technical bounce. On the contrary, the 2025 figures suggest that the company continues to maintain large scale, improving profitability, growing shareholder equity, and reasonable control over the quality of key business segments. So in conclusion, my view is that Ping An is currently a stock rebounding from support, with buyers gradually returning and rebuilding control. The 56 to 58 zone is the key area to watch. The 54.5 to 53 zone is the downside risk area that should not be ignored. And on the upside, 62 to 64 will be the first important test before the market starts looking toward the 67 to 69 area. If you find this type of analysis useful, leave the next ticker you want me to cover in the comments. And I'll continue making more videos on the Chinese market, as well as international stocks. Nerbatmorn, Min Kuthe Lam Temo Ban English Mut Hun Kier